with us. My name is Anthony Sebare, and you're still watching Financial Markets. Now we are going into our top stories here. Looking at the stock of foreign reserves has dropped 37 million US dollars. Now, according to Bank of Uganda, the stock of foreign exchange decreased to 4.23 billion in June, down from 4.26 billion in last year, which is about 4.3 months worth of import cover from 4.4 months. The foreign reserves have dropped by 37 million, according to Bank of Uganda, and the current reserves are now worth about 4.3 months of import cover, down from 4.4 in February. During the period ended May, according to the Bank of Uganda, the stock of reserves stood at 4.23 billion Ugandan shilling, US dollars, from 4.26 billion US dollars in February. And Uganda imports more than it exports, which puts a lot of pressure on the foreign currency reserves due to persistent growth in the foreign exchange outflows. The drop has also been worsened by the volatility in the global economy, which has caused an increase in the prices of key imports commodities such as fuel. However, this has been mitigated. Export earnings, which for the first time in many months increased by 11.6% quarter on quarter, growing to 111 million US dollars. Export reserves, the central bank said, were boosted by rising global agricultural commodity prices and an increase in the export volumes from Uganda. During the period, the increase by 3.1% due to a surge in the global prices, more than compensated for low import volumes. Oil and non-oil imports volumes are contracted by 14.1% and 7.3% amid a price increase of 30.6% and 12.1% respectively. The Central Bank also indicated that current account deficit had narrowed by 22.9% to 768 million US dollars, reflecting improved deficit, increased secondary income surplus, and narrowing of primary deficits in the quarter to May. The balance of payment is expected to improve in tandem, likely shrinkage of trade deficit as inflation impacts on consumption and investment demand, while the financial account surplus is expected to narrow on the tightening monetary and financing conditions. However, on the other hand, the central bank said foreign direct investment and increased project support inflows are expected to support the financial account, and overall the balance of payment deficits are projected throughout most of the medium term due to the high costs of debt service, averaging about 1.4 billion US dollars, and narrowing the financial account surplus amid a widening current account deficit. The central bank also noted that the shilling has continued to depreciate against the dollar at a rate that is faster than other East African community currencies. Between May and June, the shillings depreciated by 3.1% compared to 2.6% in May. And in June, the central bank noted that about 37.25 million US dollars was sold compared to 222.75 million US dollars in May, as volatility in the foreign exchange market subsidized. However, an increase in the cash reserves ratio on June 23rd offered some support for the shilling, and definitely this helped the shilling get back to its feet. Now, projections are according to Bank of Uganda, the shilling is expected to increase, to continue depreciating, mainly due to the global developments and the weak balance of payment position. During the quarter to June, Uganda's trade deficit contracted by 7%, reflecting economic activity within the country. Definitely, that is a story we will be following, as well as the stock of foreign reserves drops by 37 million US dollars. These foreign reserves, the currency, or they help to kind of hedge the currency against these problems like inflation that are surrounding the economy, and definitely these are usually through the US dollar currency that the government is able to buy and reserve for emergency in case things go out of hand. But we are seeing them decrease due to, of course, slowed down economic activity, and us being a major importer than importer and than exporter, this puts us also in a very vulnerable position when it comes to the foreign exchange, because when we import more than we export, we find ourselves in most cases trading our currency and buying the dollar expensively, because we make it scarce. We put a lot of pressure on the dollar, it becomes more expensive, and the more expensive it becomes, definitely the more the more its value, and the less our value, the value for our money. So it's important. But the report also from Bank of Uganda shows there has been a surge in exports, in terms of agricultural exports from Uganda, especially because of the increasing global prices for food. And so you find that things like maize, coffee, and other commodities, food commodities, are of course trading at high prices, and this has also given us a benefit that we can trade these agricultural products at higher prices. Of course, we will be following up with that and more, seeing how the foreign reserves play out, and see if we can go up from this drop of 37 US dollars million, and see how our reserves actually move there in our favor. And definitely that's a story we'll be keeping you updated on. But moving away from the foreign reserves and now into the interest rates on short-term lending between banks. Now, these interest rates have gone up according to reports. Now, the interest rates on borrowing between banks has increased to 7.3%. according to Bank of Uganda. This comes after Bank of Uganda early this week increased the central bank rate. Actually, that was last week on Monday or Tuesday. The Bank of Uganda, the central bank rate was increased 2.5% from 7.5%, which is expected to impact the interest rates. Early this week, last week, the central bank noted that the 7-day interbank interest rate had increased to 7.3% in the quarter ended June 2022 from 6.8%, while the overnight rate had increased to 7.1% from 6.5% in the quarter to March. The central bank also increased cash reserve requirement to 10% effective 23rd of June as part of the monetary policy stances that seek to ensure that inflation eases back to within target in the medium term. The primary market yields also increased, with a notable increases observed in the 2-year bond from 9.9% to 11.9%, and the 20-year bond from 16% to 17.4%. Secondary market yields for all tenors also increased across the board. However, the interest rates on the shillings-dominated loans declined to 18.3% in May 2022 from 18.8% in April 2022, while the foreign currency dominated rates dropped to 6% in quarter to May from 6.2% in the quarter to February. Bank of Uganda also said during the period the shillings lending rates declined in manufacturing, transport and communication and building, mortgages, construction and real estate. But the increase in the central bank rate is expected to have a lag-on effect on the lending rates in the coming months. The central bank also noted that at 9.5%, the private sector growth had remained low, below the historical average. During the period, year-on-year growth in the private sector credit averaged 9.5%, and in the quarter to May, a slowdown from the 9.9% in February to October. Credit growth was strongest among the personal and household and building and mortgages. The central bank also projected a further decline in private sector credit due to tightening of monetary conditions. There are definitely something coming there from the central bank, which we expected from definitely the onset of the increasing central bank rate from 6.5 to 7.5 earlier in this quarter. That's around May, and then in June from now 6.5 in July, from 7.5 to 8.5. So we are seeing this as probably the leading cause of the interest rates of banks also going up in terms of what they have to offer some of their, the people that, of course, are working in the banking sector. The interest rates now on the short-term lending also have moved up in tandem. But as well, the fixed income securities have also gone up, with highs of at least 17.4%, as we have already seen in reports from Bank of Uganda. So definitely a problem, but creating opportunities. And, you can now buy bonds and bills, those fixed incomes that can actually reserve your capital for you over a long period of time. And you can be sure that they will be bringing a very attractive return later on. But as well, what private sector business affected definitely because now credit will be very expensive to access. Loans on several commercial banks will be very highly charged with interests, and this will definitely repel away private sector players who always make use of these loans and to grow their businesses and make a little more money. So we're seeing this a bittersweet experience as we know the Bank of Uganda tries to control inflation and also tries to keep the private sector as well happy, not depressed without any credit solutions. But we'll see about that report and more, and we will of course give you updates concerning that rising as well. Moving on to the United States of America, the man himself, Elon Musk, has ditched Twitter, dealing of course deals triggering the response. Elon Musk on Friday pulled the plug on his $44 billion deal to buy Twitter, accusing the social media giant of misleading statements about the number of fake a regulatory filing showed. Now, Musk's efforts to terminate the deals that he inked in April sets the stage for an epic court battle over $1 billion backup fee, and Musk hereby exercises the right to terminate the merger agreement and abandon the transaction, his lawyer said in a letter to Twitter, a copy of which was filed with the Securities and Exchange Commission. Elon Musk's change of heart appeared to suggest some buyer's remorse for offering a price of $54.2 US per share for that now applicable. That is CFRA Research Senior Equity Analyst Angelo Zino said in the note to investors before the deal was actually nixed. Now, Twitter has held firm that no more than 5% of accounts are run by software instead of people, while Elon Musk has said he believes the number to be much higher. Immediately after the news broke, Twitter board chair Bret Taylor vowed to sue Elon Musk to hold him to the terms of the buyout deal, saying that they are confident they will prevail. Now, definitely this, of course, follows the growth, in speculation around whether Musk was to buy these, Twitter, stocks or not. But now, of course, he pulled out, according to his lawyers, and definitely there are quite many consequences of this. Now, Elon Musk's pursuit of Twitter was a melodrama in the first place, from the beginning to the end, and a volatile courtship between Mercurial billionaire and the massively influential social media platform. That relationship, an obvious love-hate affair from Musk's side, now seems to set to end the acrimonious divorce that was, of course, in It all began with an expensive first date when, of course, Musk, a longtime Twitter user known for inflammatory tweets, snapped up 73.5 million shares at a cost of nearly $2.9 billion US dollars. The purchase, which was revealed in an April 4th regulatory filing and gave him a 9.2% stake in the company, sent Twitter shares soaring, and speculation that Musk was seeking an active role in the company's operation. It also earned him a seat on board, that is according, of course, to CEO Parag Agrawal, announcing the offer in a tweet, of course, and called Musk a passionate believer and intense critique of the services, which is exactly what the company needs. But Agrawal later said on April 10th that Musk had against joining the board, a move the Twitter CEO believed was for the best. Rather than amicable ways, Musk launched a hostile takeover bid for the company, offering $54.2 billion US dollars a share, offering $54 a share in an April 13th filing. And then, after saying it would carefully review the offer, Twitter adopted a poison pill defense, announcing a plan that would allow shareholders to purchase additional stock. Now, then came the plans for a walk down the corporate aisle, as Twitter reversed course and said that on April 25th that it was selling to Musk a deal valued at $44 billion US dollars. But weddings can be expensive, so Musk took action to cover the cost, parting with $8.4 billion US dollars in shares in electric car maker Tesla. It's up to $21 billion US dollars from his personal fortune, with the rest of of course, financed by debt. Musk was already planning his new life, with saying a few days later that he would lift the ban on Donald Trump, which was handed after the January 2021 riot at the U.S. Capitol by the then president's supporters. But Musk soon began showing signs of cold feet, saying that on May 13th that the deal to buy Twitter was temporarily on hold, pending details on spam and fake on the platform. In early June, advocacy groups decided to speak now instead of holding their peace and forever holding their peace, and launching a campaign to stop Musk from going through with the which they say would allow him to hand a megaphone to the demagogues and the extremists. Musk, meanwhile, accused Twitter of failing to provide data on fake accounts and threatened to withdraw his bid. On June 16th, however, he offered signs that the match would still go, and pitching a vision to Twitter staff of a 1 billion user platform. But he was hazy on issues such as potential layoffs and free speech limits. It all came crashing down on July 8th when Musk called off the wedding and accused Twitter of making misleading statements about the number of fake accounts. The breakup between the billionaire and the social media platform is said to be far from friendly, and Twitter's chairman tweeted that the company will pursue legal action in order to enforce the deal, setting up a pricey showdown as the divorce heads to court. That's definitely a story from United States there, as Elon Musk, the boss of Tesla, and quite other SpaceX and other companies, who was, of course, set to buy a big share of Twitter, almost to buy the entire Twitter, is now saying he's pulling out of the deal due to Twitter failing to disclose all the information regarding the fake accounts that the platform is holding. And Musk said, no, I'm not going to buy, and he's pulling out. And of course, Twitter is saying, we are going to take legal action against him because definitely there is a lot of damage that has been done already, and the deal was almost underway. That was definitely cut short, and we will see what comes next for Elon Musk and Twitter as well. But thank you very much for remaining with us. Thank you for sharing with us. Remember today we had the National Insurance Corporation at the Uganda Securities Exchange ring the bell, meaning they had the 7 million shares that of course were given to shareholders as a bonus issue, listed on the main investment market segment of the Uganda Securities Exchange. And definitely this has definitely been one of the greatest milestones for the company that has been listed since 2010. And you can follow more about National Insurance Corporation, right? And you can also invest along with other investors on the Uganda Securities Exchange in the company, if you may so wish. Thank you for being with us. I hope to see you tomorrow. Coming up next is Mr. Fred Makubuya with UG Tukole. Have a good day. See you tomorrow.